everyone, and welcome to the 21st episode of Not Just Numbers, Honest Conversations with a Financial Advisor and Lawyer. I am Madison Demora, and I am here with Mike Gary. Mike is a financial advisor and a CFP and the founder and the CEO of Yardley Wealth Management. He is also an estate planning lawyer, and his law firm is Yardley Estate Planning. Hey, Mike.
Hey, Maddie, how are you today?
I'm good. How are you?
Good. We're gonna get some snow melt today.
Yeah, we are. Yep. It's almost 50 degrees out today. It's crazy.
Looking forward to it. Less looking forward to how much water the dogs will be dragging in
Oh
the next
yeah.
couple of days.
Oh yeah. Next couple days, absolutely. Yep. You're starting to see grass out there now.
Yeah, that's good.
Yes. All right, so today we are going to discuss an article from the Wall Street Journal, and it's titled Beware of the Most Crowded Trade on Wall Street, and it is written by James Mackintosh. As previous episodes, I will read a summary of the article and Mike will answer some questions. All right, so the article discusses the widespread belief among investors and in a forthcoming soft landing and lower interest rates based on the Federal Reserve's dovish forecast. The author expresses skepticism about this consensus, pointing out past instances where investors' convictions were proven wrong the last 3 years. Despite signs of slow-growing economy and potential challenges, investors appear confident in a soft landing scenario, with the market already pricing it in. The author cautions that gains from betting on a widely agreed upon outcome may not be sustainable. All right, Mike. Do you think the historical examples of investor consensus being wrong, as mentioned in the article, should make investors more cautious about the current strong belief in a soft landing and lower interest rates? Why or why not?
Yes. So, as he detailed in the article, the consensus was wrong the last 3 years, right? So 3 years ago, the view was, well, we're just getting past this pandemic. We're still in it. There's no way the stock market could do well. And then it did. And then, the following year, 2022, the thought was, well, interest rates will be low for a long time. Stock market's probably about there. And interest rates rose a lot. Stock market got crushed, right? So then at the end of 2022, going into 2023, the consensus was, well, we don't know what's going to happen. And then, bond rates moderated and the stock market did really well. And, so now the consensus is because inflation has come down a bit and we still haven't had a recession, but knock wood there. The thought is now, well, the Fed will start cutting interest rates soon. And, we're back to the races with the market and we'll avoid the recession. Well, we may avoid the recession. I hope we do. But if we don't, it's okay. But the thought that the Fed will start cutting interest rates so quick, I think might be like premature optimism. I think when he wrote that article a month ago, there was a 20% chance that they would cut rates in January, and like an 80% chance in March. Well, they didn't cut rates in January, and interest rates are a little bit higher than they were when he wrote that article. That not the government rates, but the ones set in the market. So I'd say already it's shaping up certainly not to be as quickly as the most optimistic takes. But, I think after they stop raising, it would be kind of normal for them to hold tight for a little bit before they start to reduce interest rates. I think over my lifetime, people have been too focused on short-term interest rate moves. Back 25 years ago, it was whether Alan Greenspan had like a thick or a thin briefcase on his way to the Federal Reserve meetings. And people would think like, oh, they're going to cut or keep the same or raise them. That's just ludicrous, right? All this talk of short-term moves is really, I guess it fills headlines and lets somebody say something on CNN or CNBC or MSNBC. but it really is irrelevant to most people's short, intermediate, and long-term goals, other than the fact that it would be easier for people to buy houses if interest rates were lower. I mean,
Yep.
that's the big thing.
Yep. So, how might the Federal Reserve's recent dovish forecast and the dot plot of forecasts influence investors' behavior and market dynamics in the coming months?
Sure. So that if they think interest rates are going to be lower, that makes stocks more valuable and bonds more valuable. And then holding cash less valuable. So if they think all those things are going to happen, it would lead people to be bullish on stocks and bonds and bearish on cash. And there is a lot of cash on the sidelines. I think there's like $8 trillion of investable cash in brokerage accounts right now. And so that's giving people hope too. Like people, if interest rates go down and you can't get 5% anymore on a money market, it goes down to like 2 or 3%, maybe people will be more likely to invest that cash. And they
Yep.
probably would.
Yeah. So, what do they mean by a dovish forecast?
Sure. So they use like hawkish when they think that if they think the Fed is going to increase rates to try to like slam the brakes on the economy because inflation's getting too high or out of control. And dovish would be like a softer, like lowering interest rates, usually to spur the economy on, right? So yeah, good question.
Okay. Okay. All right. So the article points out the lack of investor concern about the potential downsides, such as a slow growing economy turning into something worse or inflation proving stickier than expected. Do you think investors are overlooking potential risks, or are they justified in their confidence?
So that's a good question. When he refers to investors, I think he means like professionals who make bets on the short-term moves in interest rates, right? And so those people probably are overconfident in what they think is going to happen. But if you use the broader term of investors, meaning like everybody else, like me or you or our clients or people who manage their own investments, I don't think that people are overwhelmingly bullish and not thinking about risk. I think, we did a podcast just a couple months ago about how the economy is so much better than people think it is. Right? People will say like their own position is good, but everybody else is bad. So I don't think, I mean, consumer sentiment has gone up a lot in the last 2 months. I don't think it's gone up that much that people are no longer thinking about risks or that inflation might be an issue.
Okay.
I think he's talking only about professional investors.
Okay. All right. So, considering the market's rapid rally and the significant gains in the interest rate sensitive stocks, speculative technology, and biotech stocks, do you believe these sectors are accurately reflecting the economic outlook, or could there be a disconnect between the market sentiment and the economic reality?
I think there's always a disconnect between the economic reality and investor sentiment. And I wouldn't be surprised if that is true now. You know, part of that the S&P 500's big rise last year, like more than half of it was because of how seven stocks did, right? Those seven stocks are up accumulatively more than 100% since October 2022 in 15 months. Now, the other 493 stocks have not done nearly as well. And so, I think it would be pretty normal for there to be some mean reversion, right? So those seven stocks can't just keep going up like that because the math doesn't work, right? They can't be worth $50 trillion, right? Like it just can't. And my hope is anyway, is that the other 493 stocks do start to perform better and have more of a normal-ish market.
Okay. So the article discusses the shift from fear to greed in the options market, with the VIX reaching its lowest since before the pandemic. What implications might this shift have for market volatility, and how should investors interpret this change in sentiment?
Sure. So the VIX is a measure of volatility in the market, and it's really low. It that changed a lot, and so that is forecasting lower volatility. The thing is, though, that VIX, that historically, I feel anyway, has changed on a dime. So anything could happen, especially something out in the greater world, right? An escalation of some of the armed conflict, in the Middle East or Eastern Europe, or us getting involved to a higher degree than we are. Anything can happen. I wouldn't put too much faith in where the VIX is.
Yeah. Okay. So, given the past 3 years' instances of a strong consensus being proven wrong, how should investors approach the current situation? And are these lessons to be learned from these historical examples?
Yeah, so what I'd say is they should pay no attention to what the consensus thinks. Just like in our, don't rely on the pundits talk. Listen, there are things that you can do to make sure your situation is good. And don't think that, oh, I'm going to go into all stocks because the VIX is lower, or I'm going to buy bonds because I think rates are going to come down. You need to figure out what your allocation should be based on your personal situation and risk tolerance, and then move to that allocation quickly and tax efficiently, and forget about the VIX
Mm.
or sentiment going up or down this month or
Yep.
last month.
Okay. So don't listen. Don't
Don't
listen to the
listen.
consensus. Yep. So
Hmm.
the article mentions the broadening of the stock market beyond the big tech winners, with smaller companies and interest rate sensitive stocks seeing gains. What factors do you think are driving this diversification, and do you see it as a sustainable trend?
Well, I hope it's a sustainable trend. Since he wrote that article, some of the small caps have lost ground again to the S&P 500 and those Magnificent Seven. But yeah, I think it will be normal over time. Like, I don't know when. I don't know if it'll be this year, next year, but yeah, so it makes a lot of sense for the Magnificent Seven not to perform so extraordinarily well, and for the rest to catch up. Historically, once stocks are like in the top 10 returners for the year, or they get to be like the largest stock because like their value has gone up so much. Historically, the returns have come down from that, right? Because if you are the largest company and you have a $3 trillion net worth, or market cap, how could you possibly double or triple in the next couple of years, right? It's just a math problem. There's just not that much money, right? It makes so much more sense for a company that's worth $1 billion to be able to double or triple in a couple of years.
Yep.
So I hope that answers that question.
Yeah. Yeah. Absolutely. How might external factors such as a geopolitical event or an unexpected economic data impact the likelihood of a soft landing and lower interest rates? How should investors prepare for such external uncertainties?
Well, I don't think that there is any way to prepare, right? Because I think you should be thinking about what your plan should be all the time, and shouldn't really deviate from the plan. But I think we talked about a few minutes ago, the geopolitical risk are probably the biggest risk to a soft landing and inflation, right? Some sort of shock, right? So some of the Houthi rebel shooting at some of those cargo ships, right, has influenced inflation in some small places. But what if that increases, right? Or if I think we have been drawn into a little bit of skirmishes over there. If they get worse, what if it does block supply chains? We've had issues with supply chain inflation not that long ago. So maybe that's it, or maybe some other thing. Usually these things come up and it's something like totally different, right? So back in 2019 or 2020 this year, at this time of the year, COVID was like this thing that might have happened in a lab, and we don't know what's going to happen. Well, it really, really impacted us. Um, I think generally we tend to get blindsided by these major things. I think that people are always looking for what's going to be the next thing, um, and probably overstate. the problems most of the time, and then something else will come up and just bite us in the butt.
Yep. Yep. I remember the COVID times when it first came out, everyone was like, how long is this going to last? Like no one thought it was going to be, a year to
Right.
however longer it
Oh,
took.
maybe you'll have to stay home from work for a week or two.
Yeah, exactly. And
Games
then,
are getting canceled, plays are getting canceled,
yep,
and then next
yep.
thing you know,
We are joined here today with Karen Lynch. Karen is the COO here at Yardley Wealth Management. How you doing today, Karen?
I'm great. How are you guys?
really good, really good. So
Yeah.
glad to have you
Good.
with us.
Thank you.
Yes. So Karen has been with the YWM firm since February of 2015. So Karen,
Great.
tell us about your role in the company and what do you enjoy most about work?
Sure. I make sure that we're all working efficiently and our clients' needs are met on a daily basis. And I like sharing my experiences in this business with my fellow colleagues and being a mentor. I enjoy making sure our clients have the best experience possible, and I love speaking with them and helping them and making them feel, like their needs are met.
Yeah.
So
And so 9 years, Karen, what's it feel like, about 30 to you?
it went fast. It really has. I think back and I'm like, wow, I can't believe it's already been 9 years. So it's
Yeah.
been very enjoyable, and I'm really glad that I met Mike and was able to join Yardley Wealth and have this
Yeah.
experience and
It's
share
amazing.
the journey.
It's amazing to me, right? Because so Yardley Wealth will be 18 in February, or is 18 in February, right? So you've
That
been
half
here
the
half
time.
of the time now. It's
Yes,
crazy. That is
yes. Hopefully,
hard
it's
to
been good
believe.
for you too.
It has been very good for me. Has been
Good.
very good for me.
So Karen
Good.
was one of your first employees for YWM.
Yes, before Karen, we only had interns, and so they worked a short amount of time. Some of them were amazing, some of them were okay, none of them were bad. But yeah, it was always like a brief, part time, couple hours here and there, and then usually longer hours during the summer. But Karen was the first actual full time. Well, she started as part time, became full time quickly as she saw all the things I should have been doing better than how I was doing them.
Okay.
But
Well, happy
yes,
to help with that.
Yeah. Karen, outside of work, do you have any hobbies or activities that you are passionate about?
Well, I really enjoy Zumba. I love the dancing aspect of it. Find that very enjoyable. At least do that at least 2 evenings a week, and same with yoga. Also to just help relax. It feels as good as a massage, I think, when you're done doing a session. And I try to do that at least 2 times a week for about an hour
Yeah.
period. I love trying new foods and cooking new things. I collect a lot of recipes and I have piles and piles and books of things. And someday maybe I'll get to make them all and try them all.
the
But
Zumba and
that's
yoga, do you do that in person now, or do you still do like on
we
the screen or?
no, we do it in person
Great.
for over a year now. I did participate during COVID. They did have it remotely, just like in a Zoom session, like we are now. And but it's more fun getting together with a crowd of people and
Sure.
doing it. So glad we're back at that in person.
Yeah.
I'll
Yeah.
say I never ever was disappointed in a yoga class. I haven't done one recently, but I've done a bunch over the years, and it's always a great feeling when you're done. Like I don't know, you
Yep.
just feel better. Now
Yes.
Zumba, I could never do because of my lack of coordination. That no
Never
one
say
wants to see
never.
me no one wants to see me in a Zumba class.
Well, if you stick with something and you keep at it, it doesn't matter as long as you're moving
There you
Yeah.
go.
and you
That's
get
very
better
true.
as you go.
Yeah.
Mhm.
My gym offers the Zumba class too, and I feel like a puppy dog on the outside. They're all having so much fun and laughing and dancing, and I'm like, I should really join one of these classes. They look like they have so much fun.
My
Yes, you
sister
should try.
Debbie has been an instructor, and she has at the gym, she's taught kids to do it too. And she said it's always fun. Like they really liked it.
Yeah.
That's great.
Yeah.
Yeah.
Get them
Get their
moving and
energy. Yeah,
coordinating.
exactly. Yeah, get that energy out, right?
Yes.
So share a bit of what you love to do in your free time.
Okay, so well, as I did say, I do like trying new restaurants. And my husband and I like to visit museums. We just enjoy visiting different types of artwork. And when I had the opportunity for this in the spring, the past year, we went to Denver, Colorado, for a conference for Yardley Wealth, and he joined me and did some skiing. But we were able to go to the Denver Art Museum there, and that was different types of artwork indigenous to the city there, and we enjoyed it very much. So I just like
Yeah.
exploring, going to different places. Um, yeah, so my
Yeah.
family and I over the holiday just went to Pod. I don't know if anyone's ever been there in the city in University City, but um, it's a fun dining experience because they actually have pods, and we had a group of 8, so we got to sit in the larger pod, and you get to change the lighting and the mood while you're
Oh,
eating,
that's
and
so cool.
so I don't know,
Yeah.
it's fun. So we just try to have different fun experiences like that. Someone chooses a different during the holiday between the Christmas, New Year, a different restaurant, and we'll go exploring. Sometimes go to a new museum, or someone will pick a new experience. So that's something that we enjoy doing.
Very nice.
That's
Very
great.
nice.
Yeah.
So whether it's pets, children, or anything else, do you have any interesting or funny stories to share about your family or furry friends?
We do have Xena, our Aussie Doodle, and then my daughter recently added Luna, a Cavapoo. It was interesting to see the two of them interact. We called it the zoomies that Luna would get. She'd run around the house, look growling and running super fast, very fast. It was interesting. And she would jump up and hit Xena in the face, and Xena would just stand there because she's old and she just was like, I don't know what's going on. So,
Aw, that's
but it was
nice
fun.
though. That's
Yeah,
nice.
my grandpuppy. That's all I have
Yeah.
right now is grandpuppy.
Yeah. She's
Mhm.
Yeah.
also on our YWM website. What is
Oh
she? The
yeah. She's the chief
Xena
canine
is,
officer.
yes, our chief
Yep.
canine officer.
Yep.
And
Somebody's got to keep charge of those 2 unruly boys of mine.
yes.
Yep.
Yeah,
Yeah.
she's very, very sweet though. So we
Yes.
hopefully we have her for a long time.
Yes. What accomplishments at work are you most proud of and why?
I think helping Mike these past 9 years just grow from the two of us. I always would think of when we were going to add more employees and implement, processes and systems with that growth in mind of having more people join the firm. Um, yeah, I mean, there there is a lot to it, more than people probably realize. Um, with everything that goes on every day, the activity, and things are always changing in the environment. So we keep up with that and do the best we can. I think we do a great job.
Yes,
Yep.
absolutely.
So I'm going to say Karen is being characteristically modest, right? So a lot of, when she joined, it was one guy in a practice with occasional help from interns. And I think that I always did a pretty good job with the financial planning and investment advice and held things together pretty well for that part, right? Like doing everything myself. But, adding Karen, she helped control and shape the complexity of the firm because it's different now, right? There's 6 of us here. And so that means there's an HR function. There is always evolving software that we need to look into, maybe decide to use, maybe, vet for a little bit. And then once we make the decision to go with it, to actually build it out. Like none of the stuff that we have is just like off the shelf stuff and like, plug it in and just play. Like everything has to be customized to how we are. And as we've evolved from 2 to 3 to 4 to 5 to 6, like every time we add somebody and a role, it changes the workflows, the dynamics of how people work
Mhm.
together. And it's a constantly evolving thing.
Right.
And it's Karen that figures that out and makes the decisions on, like maybe she has to get my buy-in because some of the software is expensive. And Tamarack probably took 2 years longer than she would have liked, but we have it and we've had it for 4 or 5 years now. And so yeah, it's a lot. It is, just adding the 5 people makes it a lot more of a complicated endeavor. And I don't know that I would have the patience for that or the bandwidth, right? Because I have to stay on top of all the financial planning and tax rules and keep up to date with all the
Mhm.
investments and stuff like that. There's no way that one person could do a good job with everything like that. Like I might have been able to hold it together as a solo when we had 15 clients and 3 or 5 pieces of software. It's a way more complicated endeavor now. So
I
sorry if
think
I
I
had
like
to.
to, that's okay. I think I like to say I lay the structure and foundation for the rest of the team and try,
Yep.
obviously getting their input, their experiences and feedback, but try to provide some foundation and structure around that and plan the systems around that, things to keep us moving forth.
If you could give one piece of advice to your colleagues or peers, what would it be?
I'd say, do the best you can and feel fulfilled and accomplished, but don't take anything too seriously. Try to have a good balance between your work life, your personal life, um, you know, um, and do the best you can with that so that you're not
Mhm.
killing yourself working too hard. Enjoy life goes by quickly. So make sure that, you're you take care of you
Wait,
first.
she's on a podcast with her boss and she's telling her peers not to work too hard. Hold on a second. I might have heard that wrong.
Hey, you need an equal
Now I
balance
get
somewhere,
it.
right?
You need an
I
Yeah.
equal
get it.
balance. Yes,
And
yes.
I think you guys really do a great job at that equal balance. I really do.
Great.
Thanks, Madison.
Absolutely. All
Yeah, it
right.
is
You
hard.
really do need that.
Yeah.
Because you're not able to maybe you get a little burnt out or whatever, I guess
Yeah.
you could say. Make better
Yeah,
decisions. If you're being fulfilled that you're doing that yoga on the side
Yeah.
or um, getting something done personal, and then you can focus on work when you're there and focus on your personal life and dedicate your time towards that. You need to find that good balance.
Yeah.
yeah. So, Maddie, this reminds me of the conversation we had with Sandy Smith, right? And Sandy is the same age as me and Karen. We started working in the 80s and 90s, and there wasn't a thought of work-life balance at the time. You were exposed to be in, before your boss and work after him or her, and be constantly available, and like put your personal life aside for the vast majority of the day. Um, and it's much better having balance. Your life is a lot better. It's one thing that has certainly over the last 30 years improved a good amount.
Yes.
Not in all environments, obviously, but certainly in a lot of them, and certainly in this one.
All right. I don't have any more questions for you, Karen. That is all for our employee spotlight. All
Thank
right.
you.
Of
Thank you
course. Thank
for
you.
having me and having this discussion.
Absolutely. Thanks for joining us,
Yeah, thanks
Karen.
for taking the time.
Yeah.
Okay. And if any clients are listening and you have any thoughts or ideas or improvements or anything you want to talk about, just reach out.
Yeah. They know where to find you.
Yes. Thanks very much.
All right. Thanks,
All right.
Karen. So for more information on Yardley Wealth Management or Yardley Estate Planning, you could visit our website at yardleywealth.net and yardleyestate.net. You can also follow us on socials at Yardley Wealth Management. This podcast has been produced by Madison and Mike Gary with technical and artistic help from Poe Productions.